Thanks, Julie, and thanks for everyone for joining. So we're going to be talking about fixed assets in AX 2012. We're going to discuss setup, the asset record and value models, reporting, and then kind of general best practices as going along. And I'm going to hand it over to Jared really quick to explain the agenda.
Thanks, Chris. And good day to everyone on the call. Thank you for joining us for the next 55 minutes or so. As Chris and Julie indicated, my name is Jared Kramer. I'm an account executive at Logan Consulting and also one of the senior team members of our Dynamics AX and 365 for Operations consulting practice. And for those that are new to Logan, we are a gold certified ERP implementation partner with Microsoft. We are excited today for today's webinar, and let's walk through the agenda quick. We would like to do just a very quick 30-second introduction to Logan Consulting, and then we're going to dive right into it. Chris is going to get into the configuration of the fixed asset module, the fixed asset record and value model information. We're going to dive into reporting, which is near and dear to most people's hearts, and then a demo of the fixed assets transactions, and then we'll leave the last 10 minutes for some open Q&A. So for those of you on the phone who haven't heard of us before, just want to give you a quick introduction. Logan Consulting was founded in 1992, and we have been implementing and supporting our ERP customers for over 25 years. We're headquartered in Chicago, and we deployed just over 80 consultants a year worldwide on our ERP-related projects. And then, although our experience spans over many industries, we specialize in manufacturing, distribution, and professional service organizations. We support our Dynamics AX and 365 customers with assessments, implementations, and optimizations of their systems, harnessing a business process-focused methodology. As previously stated, we are an ERP Gold partner since 2003 and a very active AXUG and 365 UG member and contributor since 2014. So with that, I will pass the baton back over to Chris Rusing, who is one of our AX and 365 for Operations consultants. With that, I'll turn it over to you, Chris. Please proceed.
All right, thanks, Jared. So as he mentioned earlier, we're going to get into this setup and configuration first. So I'm going to go into the first thing we want to get into the setup is the general ledger. We need to create some main accounts and some journal names. I suggest creating at least two general main accounts, a gain and loss account for any disposal transactions, and also a construction in progress account. These can be used for all fixed asset groups and something we'll get into later. Next, I would definitely suggest creating 3 main accounts per fixed asset group. We need an asset account, so we have the basis value of the asset on the ledger, and then also a depreciation expense account and accumulate depreciation. And I think we definitely need at least 3 of these per fixed asset group to ensure that your subledger and ledger remain in balance. Also, I suggest creating at least 4 journal names, the 4 being acquisitions, so any a journal to keep track of all the acquisitions that you're making for these assets, a depreciation, so you can depreciate your assets, and then an adjustment journal, and that would include any kind of acquisition adjustments, depreciation adjustments, write-up, write-downs, reevaluations, just kind of as a whole general area for those. And then also disposal journals, so we can either scrap assets or sell them in the fixed asset module. So the first thing I want to discuss is the depreciation profiles within the fixed asset module. As you can see to this graph to the right, these are the different methods available in AX. During an implementation of the fixed asset module, only usually 1 or 2 of these are created, but as you can see, you have a lot of different options. The straight line service life is usually the most common one we see used. This can be used for different periods too. I mean, the typical is done monthly, but you can also do it semi-annually or annually. We have a manual depreciation schedule. So this is literally where you create your own depreciation schedule in the module. We have factor depreciation method. This can be either progressive or digressive, which means that the depreciation would increase on an exponential scale for progressive factor depreciation, and then for digressive, it would decrease exponentially. So just another option. Also, there is the consumption method for depreciation. This is especially unique because you need to set up additional forms for this depreciation. You would use this, for example, if you had a machine and you wanted to depreciate it by how many hours you use that machine. So for example, if you use a machine for 1 hour, then it would count for 1% depreciation. So you would set that up separately in the consumption form outside of the depreciation profile form. We also have reducing balance methods of depreciation. AX comes with 200%, 175%, 150, and 125. And then also you can set your own percentage if you would like as well. So just to make some clarification between what's the difference between the straight line service life and the straight line life remaining, they sound very similar, but they only differ slightly. So the straight line service life is, I guess, the normal depreciation method in which you're depreciating based on the total service life of the asset or the total depreciation periods. While the straight line life remaining is used typically when you're migrating new assets in. So the asset will be depreciated based on the depreciation periods remaining. So for example, if you had 60 depreciation periods total, but the asset has already been depreciated for 10 of those periods, so it had 50 remaining, the straight line life remaining would depreciate based on the 50 remaining, and the straight line service life would depreciate on the 60 total. The next thing I wanted to discuss is the setup of the value models in the fixed asset groups. So the value model is, how I look at it, is how the asset is financially affected. So in this form, you would set up what depreciation profile you're using. You could also set up an alternative depreciation profile. You would select this checkbox, this depreciation adjustments with basis adjustments. That is a checkbox to determine if you want to make any depreciation adjustments based on adjustments to the basis value of the asset. So it would automatically adjust depreciation when you do an acquisition adjustment, for example. Also, in the value model, you would select the posting layer. So in AX, as you may know, there is a current operations and tax layer. You can select any of these layers for the value model. This is commonly used for the tax layer and current layer. So if you wanted to have a tax layer have the transactions be posted to the tax layer in addition to the current layer, this is where you would set that up. You would also set up the calendar being used. So you can use a regular calendar year or possibly use your unique fiscal calendar year where possibly your new year start date is June 1st. So you would want to make sure your assets are in line with that as well. One thing I definitely wanted to highlight is the derived value models and depreciation books. So these are set up so that the system will automatically make transactions to these value models or depreciation books. And I will explain this more when I get into the demo. But essentially, when you make, let's say, for example, an acquisition to a value model, if there's a derived depreciation book on that value model, then it will also acquire the asset in that depreciation book. And this will make a lot more sense when we get into the demo, and I can show that. Also also that we have the fixed asset groups, and this is how the asset information is recorded. So in here we would have the type of asset. We would also identify specific capitalization thresholds. So maybe for your group of computers, your threshold's 500, but for a machine, your threshold's 1,000. So you could set it up differently based on the group. This is where you also set up number sequences and any relation to barcodes if needed. Now, I wanted to get into this form as well. There's two different forms that need to be set up. They're called the fixed asset group value model form and also the fixed asset group depreciation book form. So to start off with the first one, this can be only accessed if you're in the fixed asset group form or the value model form, and it kind of ties the fixed asset group and the value model together. So in this form, you would decide which fixed asset group is tied to which value model, and also determine the default service life and also default depreciation periods. As well, you would decide the depreciation convention. And this is a very important thing to note when you are setting up your assets, because it works in concert with the police and service state to determine how much the depreciation will be taken based on when that date is. So, for example, today's the 28th, and if we decided that we were acquiring an asset on the 28th, but we wanted to depreciate for the full month of June. So when we ran depreciation for June, it would depreciate for the full month. We would select the full month depreciation convention. If we had none, then it would only depreciate for the days, the days in remainder of June. So it would only do the 28th, the 29th, and the 30th. And I'll show an example of this later on as well. We also have the fixed asset group and depreciation book form, which is essentially the same kind of functionality as the value model form. It just differs slightly that it's a depreciation book. And one more thing I wanted to mention is that these are defaults. And so when you create an asset, any of these information like the service life or the depreciation convention, that can be changed per asset when it's created. Now, a lot of people may be confused, like what is the difference between value models and depreciation books? And depreciation books are essentially an area to keep transactions of your assets that are not posting to the general ledger. So the value models are used to post to the general ledger, and the depreciation books do not post to the general ledger. So the main uses that we see people want this for is for federal and state taxes, and then also possibly to forecast what their depreciation expense could be for budget purposes. So just to repeat, when you post the depreciation book, it does not post to the general ledger. Only value models do. The next thing I wanted to touch on is the posting profile, and really this is really the crux of the setup. It's very similar to the vendor and customer posting profiles in the AP and AR modules. So if you're familiar with that kind of setup, this should be making more sense to you. But essentially, when you're creating a posting profile, you want to make sure that you have a transaction for each fixed asset group. So if we had a computers, buildings, and furniture, we would want to have an acquisition transaction posting for a computer, so it's posting to the right computer asset account. And then we would want to create another acquisition transaction type for buildings, so it's posting to the building asset account, and so on and so forth throughout all the transactions. These are the main transactions that I think are needed at a minimum, but there's also ones like write-up and write-downs and revalues. a lot of additional transaction types, but these are just the main ones that people use. In addition to the sell and scrap transactions, we also need to set up the disposal parameters. So these are usually, it's at the top of the form. You can see disposal parameters, sell and scrap. So these need to be set up for all fixed asset groups and all transactions. So essentially, any transaction that happens to a fixed asset, it needs to be also reversed at some point. So once an asset is disposed, the asset needs to be removed from the books from a basis cost and also from the accumulated depreciation standpoint. So any transactions that affect those that affect the asset's value, those need to be removed and then recorded in this area. So the last thing that I wanted to touch on is the parameters, and I'm just going to kind of touch on some of the highlights. You have the option to do capitalization threshold for the entire asset module. So I mentioned earlier that you can consider a capitalization threshold by fixed asset group, but you can also do it for the entire fixed asset module. Also, you can determine if you want to automatically create depreciation adjustments with disposal. So this means, for example, we have an asset and it's the depreciation has been run through May, but we want to depreciate it in June. So let's say we want to dispose of it today. Once the asset is, if this checkbox is checked, then the asset will be disposed. There will be a depreciation adjustment for the month of June that wasn't ran yet. So it basically acts as a catch-up depreciation to ensure that you've depreciated to the point of which you disposed it, and not just since when it's last run. There's also some important parameters in regards to the purchase order integration. The first checkbox I want to mention is the allow asset acquisition from purchasing. So if this is checked, once the vendor invoice from the PO is posted, the asset is acquired and capitalized in the fixed asset module. And then also there is the create asset during product receipt or invoice posting checkbox. If this is checked, then depending on your security in AX, you can create a new fixed asset in the PO at time of receipt or invoice. So it creates the record of the asset. It doesn't allow you to acquire it. That is what the previous checkbox is used for. And then the final thing I wanted to discuss is the reason codes. So you can have a checkbox to require reason codes for asset changes, and this is any asset changes to the value model depreciation book. So for some reason, if you wanted to increase the service life of the asset and you were trying to close out of it, this would prompt you to add a reason code for why you are making that change. Also, similar to other modules, you can have reason code requirements for specific transactions. So as we'll see in the demo later, I'm going to do a disposal scrap, and it will prompt me for a reason why I'm scrapping an asset, because it's set to that disposal scrap transaction type. Now the next thing I'm going to discuss is basically the fixed asset record and the value model and what the fields mean in AX. So we'll have some screenshots so we can get a better view of that. So here is the fixed asset record. As you can see, I have a fixed asset group, computers. I have my number, which is a number sequence. We have the name of the asset, the search name, and then all these fast tabs down here. This is basically just additional fields that you can store, any kind of user-defined fields that you want for the asset. We have employee responsible, the location of the asset, any things that you would want to record just to keep track of it better. Also, if you notice when you open the fixed asset record, you immediately see the net book value and the different value models and depreciation books right to the right. So you can see that there's a depreciation book, federal, and also a value model straight line, and the status is both sold, and the net book value is 0 for both of those. Now, when we click the value model tab, we're going to go to the general tab first. As you can see, the status is sold, and you can see the posting profile that is being used. Really important when you're setting up a fixed asset record, you want to put in this information, the acquisition date and the acquisition price. This information flows through when using acquisition proposals, so it's really important that you put the correct acquisition date and the correct acquisition price. Also, since I've already disposed of this asset, I sold it, this information comes across when I sell the asset, so it's giving me the sales value and also the date in which I disposed of it. Next is the depreciation tab, and I really kind of want you guys to focus on this section right here. Here's my depreciation profile, which was tied to the value model. Depreciation profile is a straight line service life. I'm using a calendar year, and I'm using a monthly period. Obviously, the box is checked because we are running depreciation for this asset, and the depreciation run date was the same as the acquisition date, and the same as the place in service date. The asset was last run for depreciation through the 31st of January. So if you try running this asset for the month of January again, you wouldn't be able to because it's already been run through the 31st. We also have the service life, which is 3 years, and the depreciation periods is 36, obviously, because we're doing a monthly period frequency. And if you notice, the depreciation periods remain as 27.77, and so you might be wondering, well, how did we get to that point? It's because our depreciation convention is set to none. So when we initially acquired the asset on the 25th of May, it ran depreciation for that day through the end of the month. So it took 0.23 depreciation of the month of May, and then it continued and just took month by month by month until we got to January of 2018. So that is that's important to notice, that how the depreciation convention can really change a lot of different things that are going on the asset. Also, a very key checkbox right here is this allow depreciation when placed in service and disposal in the same fiscal year. So you need to check this box. I would check the box for every setup of every asset you create. It's a little frustrating because this this checkbox, I believe, should be in the parameters, but unfortunately it's not. If you are looking to add it to parameters, if you want to look in the AOT, the asset book field name is disposal same year. Essentially, when you are disposing an asset in the same year and in which it is required, you need to check this box in order for the transactions to, the behind-the-scenes transactions to run accordingly. So, for example, if we acquired a computer in the beginning of this year, but for some reason someone spilled water on it or they broke it and we wanted to scrap it within the same year, we would definitely want to have this checked to ensure the behind-the-scenes transactions work as they should. The next thing I wanted to mention is the purchase sale tab and also the financial dimension tab. So on the purchase tab, we can see that we have a vendor account and a purchase order and also an invoice associated with it. These fields only generate when you are creating an asset or capitalizing an asset from a purchase order. So without that kind of integration, these fields will not populate. And then also we have a sales account and fields for that. So when I sold this asset, I actually used a free text invoice, which I will demo later. And you can see that the customer account is listed and what free text invoice was used. So it just gives you kind of information about how the asset was acquired and sold. Also, we have a financial dimension tab. like any kind of record, I mean, essentially a fixed asset record is the same as a vendor record or a customer record. If we want to have any default financial dimensions on the asset record, then we need to put it in this area. It's important to notice that for each transaction you do, whether it's an acquisition or depreciation, you need to be aware of what dimensions you're allowing in your account structure. So it may take a lot of testing to ensure that these transactions are flowing through, the financial dimensions are flowing through each transaction, and that's flowing through your GL and your account structure correctly. So I just wanted to touch on reporting very quickly. There's obviously a lot of reports in fixed assets, but I think there's especially one or two that are very important. So the two I wanted to touch on that are SSRS reports is the fixed asset balances and the fixed asset book compare. The fixed asset balances essentially gives you all the information that you will need about an asset. It will give you an acquisition date. It will give you the basis of the asset, depreciation, accumulated depreciation. And also a really good thing about this report is that you can organize the report by fixed asset group. So as I mentioned earlier, I suggest having three accounts, the asset account and the depreciation expense and accumulated depreciation account per fixed asset group, so that when you run this report, it would be really easy to identify any differences in your subledger and ledger. This fixed asset balances report should essentially act as your subledger. So if you see any differences when you're looking at this report and comparing it to your trial balances, then that would be your best guess to start noticing any differences. Also, I wanted to mention prior when we were talking about the main account setup, for the asset account, the depreciation expense and the accumulated depreciation, you should make sure in that main account setup that they are set up for not allowing manual entry. This kind of goes without saying, but because these are sub-module main accounts, you should never be able to post them to the general ledger unless you're trying to correct a mistake that was made because someone posted them from the ledger and not from the sub-ledger. Also, we had the fixed asset book compare report. So this report can take a value model and compare it to a depreciation book. And so, for example, if you want to look at your regular value model, your straight line value model, and compare it to your federal or state book to ensure that the assets are accurate, then this is the report to use. It works really well, and if you're tracking your assets taxes, then I would definitely use this report. Just to mention two inquiries, which are, they're not exactly, I guess, reports, but I kind of see them they have kind of reporting functionality and tools. The first one is the fixed asset transactions, and this will show all transactions related to the value model on an asset, on all assets, I guess. So it's all assets transactions that are associated with value models in the module. And then we also have depreciation book transactions, which will show you all the transactions that were posted to the depreciation books in the module. These can be really useful just to determine, a quick, how much should we acquire for a fixed asset group, computers within, this date range. It kind of gives you a little ad hoc, quick reporting, and you can easily export that information to Excel. Now we're going to go into a demo. And here's the demo agenda. I'm going to acquire an asset using the acquisition proposal in the fixed asset module, and then I will acquire an asset from a purchase order. The third thing I will do is capitalize a project to a fixed asset, and then I will show how we can use depreciation proposal functionality to easily run depreciation. And then I will scrap an asset using the disposal scrap functionality in the fixed asset module. And then we will use also a disposal sale via the free text invoice functionality. So let me just hop over to this. I hope this is big enough. So here we have the fixed asset module, and I have my different common areas right here. I'm actually going to go into my fixed assets not acquired yet. So these are all the assets I have not acquired. I have a building that I will use for the project. Then I also have this desk, a standing desk for the furniture. So what I want to do is acquire this furniture first. So I will go to the fixed asset journals and create a new journal. As you can see, I have many different journals right here to kind of distinguish what I'm doing. So I'm acquiring the standing desk. Usually people just kind of run this at the end of the month to just acquire all assets that they need. And it's a good thing to just use that fixed assets not acquired to kind of see what assets are still created but have not been capitalized yet into the system. So we're just going to go into our lines. And it's going to default to today's date, but I'm going to use the acquisition proposal to bring in all information from the asset. So this is a criteria. You can kind of determine what you want to bring in based on the criteria. It's similar to other functionality of using proposal, like a payment proposal, that kind of functionality. So I'm just going to select the furniture group. So it will bring in my one standing desk. So I'll select OK, and then this all looks good. Obviously, it's a not yet acquired, and we're going to post to the current later. So as you can see, it changed the date to the 1st because that's what I had on the value model. Also, if we go to the depreciation books tab, you can see that I have a derived depreciation book based on this value model. So it's also going to acquire this asset in the Fed depreciation book at the same amount as well. So let me just post this really quick. So now the asset has been posted. And if we go in to the fixed asset record, is right here. We now have the status as open. The net book value is 3,000 for both the book and the value model. So it's been acquired for both book types. The next thing I'm going to do is acquire an asset from a purchase order. So I'm just going to go in accounts payable and go into my purchase orders. So I already have this purchase order created. It's confirmed. Let me just open it up really quick. So as you notice, I actually selected an item. So there's items built in the system. So that information is flowing across. If we go into the line details tab down here and then click on the fixed asset tab, I've already selected that we are going to create a new fixed asset, and it's under the fixed asset group computers. So once I generate the product receipts for this purchase order, since I have it checked, it will automatically create the record of the asset. So now you can see that there is a fixed asset number associated with this asset. So if we go over, click this really quick, you can see though that the net book value is 0 and it's not yet acquired because it just only created the fixed asset record. It did not acquire or capitalize the asset yet. So let me just close out of here. Now I want to generate an invoice, and then once I generate this invoice, it will actually capitalize the asset, so the asset will be available to depreciate in the system. Let me just create a simple invoice to post this. Obviously, I'm avoiding print just to save on time and be efficient. So now that the invoice is posted, if I click back onto this asset, you can see that it has a net book value now and the status is open. So now this asset can be acquired. And now this asset can be depreciated. Information from the asset flow through on the value model. As you can see, we have the acquisition date was today. So all that information flowed over. It was a computer fixed asset, so it defaulted the service life and depreciation periods. So it's really nice functionality to integrate your purchasing functionality with your fixed asset functionality as well. Now the next thing I'm going to do is capitalize an asset from projects. So the first thing I want to actually show, this kind of also uses the AP invoice integration. So let me just find this AP invoice that I posted earlier. I was actually able to post an invoice from a vendor directly to a project. So this is for this building that I'm using in the project module. So if you go to the project tab, you can see that it's going to this offset account, which is the actual project, and it's using the category construction in progress. So I know that we are adding invoices to this project, and you can continue to add invoices to this project, but for the sake of time, I'm just going to capitalize the project. So let me just go over to the project module. You can go to all projects. So we decided that we're going to build a new headquarters. As you can see, the project type is investment. It has to be investment in order to capitalize this into a fixed asset. So if we go over to the Manage tab, we can actually create an estimate. And what we want to do is create a new estimate and run it through May. So once we click OK, we have basically it said, okay, well, what were all the invoices or what were all the transactions posted to this project to create the total cost of the investment project. If we look into the work in progress, you can see my $1.5 million invoice that was posted there. And what we want to do now is go to this general tab and eliminate this to a fixed asset. And since I actually already have this created, this is actually very important. You need to create a fixed asset record before you can eliminate the project to a fixed asset. So I will select headquarters, and now I will post. And then now I also have to just eliminate this project, and we'll set the stage to finish so the project is no longer open. So now that the project has been eliminated, I can go back into my fixed asset tab and find my headquarters and see that the net book value is 1.5 million. And that same information that we were using in the project tab is also flowing through to the assets. The acquisition date is the 31st of May, just as we were running the estimate through. Again, the service life and depreciation periods, that's all flowing through from the fixed asset group buildings. So the next thing I wanted to do is run a depreciation proposal. So we'll go through to the fixed asset journal and create a new journal for depreciation. And we're just going to run it for the standing desk. Many people, you can kind of run depreciation proposal for, however small or specific or large as you want. You can run it wide open and kind of catch all, or you can run it specifically for a group or actually a specific fixed asset number. So as you can see, I just click proposals and then depreciation proposal. It works the same kind of way, except you want to change the date. So since I just acquired this asset for the furniture, I'm just going to run it through July. Clicking summarize depreciation, that basically if you're running multiple months of depreciation for a specific asset, it will just summarize all those entries into one entry instead of have it list line by line each month. So now I'm going to select my asset and determine that I actually just want to run it for just a specific asset. So I'm going to find my standing desk and click OK, and then click OK again. So as you can see, it actually took about exactly almost a half month of depreciation for June, because that's how I have it set up as a convention. And then it took the full month for the month of July. So I'm going to post this. Now that has been posted, we can take a look at the value model really quick. And go to the depreciation tab. So I have mid-month 15th of the month. It took a mid-month depreciation because the asset was before the 15th of the month. So it was acquired on the 1st. So it ran a half-month depreciation, and then it ran a full month after that. So really the depreciation convention mainly relates to when you acquire the asset and at what time are you depreciating in the month. Next thing I want to do is show disposal scrap. So you would go back into the fixed asset journal. I'm just going to go into the lines in this. I have this set up. So I'm actually just going to change the date to the 18th. Obviously, I'm in a test environment, so I'm kind of jumping around in dates. Now you can see here the different transaction types, and I'm going to select scrap. This is the only place you can scrap an asset, and then I'm going to select the actual asset that I'm scrapping, and I'm going to get rid of this tablet because let's say it broke. And the net book value I know was 909, so I'm going to actually scrap it for the rest of the net book value. And since I have a reason code on here, it's going to yell at me that you need a reason code to be filled in because I have that set up on my parameter. So I need to go to General and select a reason code. So I'm saying asset broke from accident. So now we have a reason code for why we're scrapping this asset. Just extra information, just to ensure that you have good internal controls. Now we should be able to post this. So we were able to post that. And obviously you can see that we had depreciation adjustments for disposals. So it made a little tiny bit depreciation adjustment based on the day that we dispose of the asset. And the last thing I wanted to do is a disposal sale. So we'll go to the free text, accounts receivable, and then all free text invoices. So we're going to sell an asset through this this functionality in AX. So I actually have a free text invoice created. So let me just click edit. What you want to do actually is go into the line details and then select the fixed asset number right here. So we're going to sell our very tall building, and then we can put in a description if we wanted to. And then we would put in our sales price. So let's say we're selling this for $1 million. Now once we post this, I'm not going to print it. Okay, so this is an issue where when I was discussing when we have a disposal sale in the fixed asset disposal parameters, we do not have the acquisition adjustment set up for building type. So as you can see here, all the building groups and types. So if we add a group, and then I'm going to select building, and since there has been an acquisition adjustment to this asset, then we need to add that. Let's see if we can just fix this really quick. And let's try posting this again. Oh, this year. So it's even specific where it's saying acquisition adjustments this year. And what I just did is only add it to the prior years. So I need to go back in and select prior years. So I had acquisition adjustments prior years, but I did not have this year. So let me just add this really quick, and then we'll get to the Q&A. So now we have this year. It really just gets that specific. And here we have buildings, and then we'll select our gain and loss account. Close this out. So now the asset has been posted. And that was actually a really good example of why you need to be very diligent about your disposal parameters setup, because it needs to reflect every transaction. So not just this year, but also prior years. So that's it for the demo. Now we can open it up to Q&A.
Great. Thank you so much, Chris. It was a great presentation full of a lot of interesting information for fixed assets users. We don't have any questions in the queue right now, but we'll stay on the line for just a few seconds. So if you've got a question, please enter it now. And I want to remind you all that because you registered for the event, you'll get an email with a link to both the presentation recording and the PowerPoint within a day or two. So we do have a question from Joseph, and he says he would like to see the demo again. Will it be scheduled again? Well, that's a very good question and good advice, Joseph. Chris and I will talk about that. If we should redo the presentation, you can also download the recording and watch it again. Any other questions? He says, oh, good point. I'll download the recording. So that's good. All right. We don't have any other questions in the queue. So I want to thank you all for joining us today. And thank you, Chris, for presenting once again. And with that, I will stop the recording and close the webinar.